What up, kids? Hello from Italy. I'm Howard Lindzon. I'm a little bit tired. And you are listening to Trends with Friends, I think live on Twitter, live on YouTube. We'll edit a little bit and send it out regularly. Welcome to the boys. Them boys. We've got Michael Parekh maybe in Houston. Mike?
Yes, indeed.
I'm in Prosecco, Italy. JC, phenomenal. The Prosecco wine, spectacular. Not that I'm a wine guy, but I know you would love it.
Lindzon, you are in the Venetian area of Italy. This is one of the most magical places in the world.
Magical.
Listen, they make a very special wine that is one of my personal favorites on this whole planet Earth called Amarone della Valpolicella. You may have already had it.
It runs so through this place. It's in my toilet. That's how good it is here.
It's expensive as shit. It's expensive.
It does not go well with piss. I peed in it, and I swear to God, it turned purple. Like
see what I'm dealing with, Phil? This is something that I'm talking about very special to me. He's pissing on it. You know how
rude? Shit storm for Howie is what it is.
It runs so. They have such an abundance of it here that you can wash your hands.
Always. Do me a favor. I want you to, and you'll impress your friends, right? Like all your rich buddies that you're biking with. You'll impress them. You're like, I want either a 98 or a 99. Anything else is shit. Amarone della Valpolicella, a 98 or a 99. You get that with like a stew, like an oxtail or like a stew. Holy shit, Lindsay! I'm telling you right now, Amarone della Valpolicella. I promise.
With a little bit of bread.
Ooh. Well, here's what I told him, and I don't know if this is wrong, JC. I said, get me something fresh squeezed, a la jerk. Like Phil would understand that. I wanted something, none of this old stuff. I need something fresh squeezed. Is that the wrong thing to ask for?
This is actually the opposite. They actually dry it out in the sun and then make the wine with it. So it's a very unique method. It's a real pain in the ass. That's why it's so expensive.
I know this is bizarre because I do these crazy trips, but who cares, Phil? We're in Italy. There's personality here.
Yeah, Phil.
Phil's got us on schedule already.
Phil, all right.
So listen to this, JC. First of all, this place is, I'm not a creature of culture, but I just like hitting the roads. But holy fuck, from the fruit to the pasta to I just had fresh made vanilla, whatever, ice cream with fresh cherries. Jeez. And the Prosecco, I got to be honest, other than Provence, this would be the second best.
You got to drink the Superiore.
I'm not a red wine guy. I love this Prosecco, and I like the rosés of Provence.
Phil Perlman,
and don't forget,
the world would be a better place if everybody had a glass of Prosecco before dinner every night. Fact.
Well, also, if the world could just insult each other.
Not for me, personally. I would be,
I'm not talking about you. It's not always about you, Phil.
Find me in
it's not
an
always
alley
about you. I'm talking about the world.
Clutching an expired credit card. And lying on the side of the road.
Here's how I'm holding my mic, like a teacup at this point. I've broken more mics in the history of podcasts.
This is a bull market conversation, is it not?
All right, so we've got wine flowing in the bathtub, and we've got a shitstorm for bears. That's the headline. Maybe now we can go live on Trends with Friends. Phil, what are we covering today?
We're going to cover the bull market. We're going to cover a little AI as usual. Tesla's charts looking strong. We're going to talk about you riding, like old people riding bikes. That's the name of that segment. And I'm just going to quickly plug Stocktoberfest. I think we sold out and we made 10 more available. So we have 10 tickets left if anybody's interested. And that's really all we have left. So there's not much left. So if you want to get in, it's in 3 weeks. It's like the 20th. Through the 22nd, you fly into San Diego.
10 minutes from the airport. 10 minutes from the airport, Coronado Island. Michael will be there. JC will be there. Phil will be there. We got Malik. We have my wife.
Is Batnick there?
Batnick's coming to interview Social Leverage, but we've got golf, like luxury covers, wealth management space. Pretty much my favorite investors in the world. Brian Shannon to talk about VWAPs, DUWAPs, Matt Ober, X Third Point, my partner. A lot of fintech startups. We've obviously got a lot of crypto. Ted Mertz, our pal Kyla Scanlon talking about Gen Z and millennials. Strazo. Who else? Oh God, Ben Hunt, of course.
Wow.
Matt's coming in from Australia. Jean Van Eck, Norgard, Darren Rebel, Collectibles.
Wow.
It's ridiculous.
Just come
And
here to
there's
hang
Alan.
out. Like
Yeah,
you just
Alan's
hang
coming.
out with these people and just
Tom Peterson's gonna
brilliance
be
rubs
there.
off on
right?
you.
Reed is started LA Golf with Bryson DeChambeau, probably the hottest golf company in the world. Bryson's going to be he's the Joe Rogan of golf. He's going to be a billionaire. May show up. I've got some special, obviously got a couple comedy ideas brewing as we're investors in comedy. So it's everything that investors want. Degeneracy, but great at like talking about the degenerate economy. We've got all our friends who have been
Great
on
venue.
this trend. The best venue in the world, the best venue in America, if not the world, San Diego, and the Del's recently renovated.
Listen,
It's
you
old
want to know?
friends.
Here's how I look at it. Do you want
It's
to go to Howard
250 people,
Lindzon's
so it's not too big. It's not too big.
Do you want to go to Howard Lindzon's bar mitzvah or not? Like, that's a place you want to be. Like, correct
Yeah.
me if I'm wrong. You know it's going to
And
be
you
a
don't
good
have to bring
time.
a gift.
He's not going to throw himself a shitty bar mitzvah. If Lindsay's throwing himself a party, it's going to be a good time. That's how I look at it.
Yeah, I think one of my favorite things that you guys are going to love, Tribute Pizza. I rented it's probably the best pizza. Obviously, it's not New York. So take out New York, take out Italy, but then think about American pizza. JC, you're going to fucking love this place.
That's why I'm going to California for the pizza. I'm going for the
tribute pizza.
bro.
He is the pizza connoisseur who pays tribute. The restaurant, he pays tribute to the best pizza makers in America. So the menu is full of. It's kind of like a famous golfer. He doesn't knock off. He pays tribute by creating special pizzas.
No, Lindsay, but you have Mexicans where that is. Like, I want to hang out with the Mexicans. I don't have Mexicans.
I know, but this is my party, so we do what I want.
The beach is one of the best beaches in the world.
It'd be Howard. The wine's not good. Howard.
The beach is one of the best beaches in the world. You wake up early, you go for a walk on the beach. It's unbelievable.
If you step on a syringe from Mexico, we give you $100. So we're going to clean up the beach too. So if
Phil every morning is gonna do a routine workout routine that'll rival SEAL Team 6.
Yeah, we'll go down. Well, you know what we'll do? If anybody wants to go, we'll go for an early run on the beach, and we'll run down to where the SEALs kick us out, and then we'll run back, and that's the run. Because I've been kicked out. Like I always run down, and then they're like, "You can't be here," and then I just turn around.
Midnight burritos with JC.
There you go.
Okay.
Let's get on to some charts.
I get to throw in the Coronado ice cream. Howard, do you remember that?
All right, can we talk about China absolutely ripping? Can we talk about this bull market? They're buying the worst stocks. Howard, the worst companies on planet Earth, they're buying those.
Let's start with the NYSE Composite. Broad market, new cycle highs. We're going to get to China. I promise you, JC, you got a whole thing. And I even added that that mid-cap China stock you were talking about this morning. But go ahead. The NYSE Composite. The Browley's broadening, and it's a shitstorm for the shorts. Am I allowed to say that?
Let's remember what's happening here. We're looking at the number of stocks on the New York Stock Exchange, which is the most important exchange in the world. The number of stocks that are making new 52-week highs minus the number of stocks making new 52-week lows. Now,
Howard, I think your microphone is on mute. Sorry.
This is
Don't tell them.
The reason that this is skewed is because there just aren't any stocks that are making new 52-week lows. We're 2 years into a bull market. It's very difficult for stocks to make new 52-week lows because they're nowhere near new 52-week lows. So it's very skewed. So it's not so much that there are so many new highs. In fact, on many times throughout the year, we've seen a lot more stocks making new 52-week highs. So it's not so much that as it is the lack of new lows. So traditionally, I am a much bigger fan of looking at how many stocks are making new highs and then looking at how many stocks are making new lows versus arbitrarily subtracting them from one another. But what I did want to point out is that this is classic of an environment where investors are being rewarded for owning stocks and investors are being penalized if they don't own stocks or they don't own enough stocks or they're in too much cash. The opportunity cost that they are costing themselves is off the charts. And this is just a classic example of that. So if you are in one of these, oh my God, the end is near. Oh my God, the yield curve is now not inverted anymore. Blah blah blah. The Fed, if you're one of those, what you're looking for is an expansion in stocks that are making new lows. You're not going to see it on the new 52-week lows list because they're so far away. I would be looking at the 1-month low list, the 3-month low list, even the 6-month low list, but nothing's happening there either. 1 and 3-month lows. If you start to see an expansion in those lows, the most amount of 1-month lows, 3-month lows that we've seen in a year or two, something that really pops, that's when evidence of deterioration starts coming into play. Obviously, we've yet to see that.
Hey, JC, is there anything to the idea that we're seeing this broad strength during a seasonally less strong period?
Yeah. You nailed it. You and I are both very good friends with Jeff Hirsch of the Stock Traders Almanac, and him and I have been talking about this for a long, long, long time. Jeff is a great example of this community of investors, that we have, that I used to be a big fan of. I used to race to get it every year, read it from cover to cover. And now we're good buddies, right? Something I've always spoken to him about, and he'll agree, is that it's not so much like, going into a specific season, we want to, move our portfolios accordingly. Oh, it's supposed to be a bad time, go to cash, short stocks. Oh, it's a good time, buy everything. No, that's not how it works. What we want to do is we want to look after the fact. And in an environment where stocks are supposed to do poorly, and historically stocks do poorly in September, right? The worst month of the year, things are pretty good so far this month, and we only have a few days left. So very impressive resiliency in an environment where stocks are supposed to sell off. They're not. That's the signal to me always, and that's what we're seeing right now. You nailed it, Perlman.
Plus, we had a crazy fake out. Go ahead. Sorry.
Sorry if you can hear me. The other thing is, and then we'll let Mike chime in. The other thing is, it did start. Listen, we talked about seasonality at the beginning of the month. It did. I think the resilience is the key because it played out on cue, right away. Everybody's following the schedule. Back to school, moods bitchy. The presidential race. The silly debate was silly in the sense that it was childish, as always. And we sold off at the beginning of the month. So I think the resilience of September in the face of that has caught people by surprise, because the work that Hirsch does over the numbers are the numbers and the data is the data. So everybody got excited, including myself, saying, "Oh, see, you can't ignore the seasonality," and then boom. So really what matters is the reaction to the seasonality, which was fuck it. That's what's creating this shitstorm at the moment for the bears. Then you had the Apple release. Then you have, Ohm will be at our event, and Michael will talk about this next. And I know we got to talk about China, but Google's camera has always been better than the Apple camera, or at least the apps around it. Now Apple is turning the camera into a weapon again, and with the new camera app, and we'll talk about that. So in a world where Facebook has the Ray-Ban deal, and Google's camera has always been, at least for the camera nerds, pretty damn good. Apple's going to start taking the camera seriously, according to Ohm, and I'm sure, Michael, you have thoughts on this, but once you point your iPhone at something and can get all the AR and all the data at it, and it becomes, a translator for you, the camera is the unlock. Because everything else about your smartphone on an app is making you miserable. The delight that comes from the camera is still the greatest thing, and it's underutilized. And once the camera becomes your portal for search and for augment and for enhancing your life, and you don't have to go on social media to get yelled at or hear misery, I think with Apple pushing up against all-time highs and Facebook pushing up against all-time highs, and obviously Google kind of slowing its descent finally against all the negativity around the lawsuits and the government lawsuit. So I think, I don't know, with the Apple release, Mike, what was there any surprises there that are helping the market here?
The biggest surprise to me is how ho-hum the market is treating Apple's position right now going into the fall. I did a big post on this that, Apple may be the most misunderstood of the big seven in terms of the AI personal juggernaut, because the reviewers and the media and the pundits are looking at the iPhone 16 launch that was September, this, every year, as just another annual launch. And they're like, where's the beef, which is the title of my post. Where's the Apple Intelligence, which, happens to be a few weeks late. They're going to launch it in October. It's going to be slow number of features and then high. It'll really mushroom next year. But to your point, the camera is a key piece of the iPhone 16 launch this time, particularly because of what they put this new button on the side of the thing over here called the Campton. They call it the camera control, not a button. And the whole media, there's a whole bunch of snickering over this, like, oh, it's a button, and but it's what they've done is a mini trackpad. Technically, it's a marvel because it's a full control with like a mini touchpad. You can do all kinds of haptic movements and so on. And then there, as you said, there's an app that shows up on the side when you play with it, and you have fundamental control over not just how you take pictures. Apple calls it, basically, they're moving to a world, especially using AI and computational photography, an experience for people to capture their reality, their memory as they occur, the best versions of them. And that's what the system does. And they're giving, for the first time, huge amount of control back to the more advanced users who want to filter and use the software technology to make photos be anything they want, had the look of the 1970s, 1980s film, etc. It's really, as it gets into the hands of more people over the next couple of years, the camera control will be something that will be copied or emulated by everybody. Right now, it's utterly underappreciated. And there's a broader story on Apple Intelligence, which, as I said in the post, it will take a couple of years to roll out, just because software always takes longer than hardware. But Apple is in the right direction. They have one of the biggest assets, which is the trust of over 2 billion users in terms of their privacy. All of the real AI data-oriented things are going to happen on your device. And then when it needs to, it'll go to a personal Apple cloud, and then it'll connect to things like ChatGPT and Google Gemini and so on in terms of doing the larger language model stuff. So yeah, Apple, I think, is underappreciated. The current feedback on it is that, it doesn't have anything yet. It's just a Me Too phone like the 15 and the 14. They haven't changed anything, and that it couldn't be farther from the truth.
Correct. Listen, we'll talk about it at Stocktoberfest with Michael and Om, who's a photo. Listen, he's old school like us. So he's not like the new unboxing and like angry about everything. He's angry about the fact that Apple took so long to do what they just did now. Meaning, you're supposed to go to Facebook for your memories. Your photos are your memories. You don't need a social network, right? If I want to search a trip from 5 years ago. Anyways, I'm very bullish if Om is bullish. Obviously, the technicals are great. And in the end, in a shitstorm for bears, we're not just talking about Apple, but it is important that Apple's doing well, because we all carry around an Android, or most of us in America carry around an iPhone. So it helps that there's negativity. So first of all, the negativity is good. The stock ain't going up if everybody knows why it's going to go up. So we need the negativity. The press is handing that to you in a silver platter, right? They're talking about Nvidia. It's like, who's the biggest market cap no one's talking about Apple. That's good. I'd like to see it. And the people that I respect who understand the technology, Michael and Om, are bullish. Michael's been bullish here even through what, wasn't a good product launch with the Apple Vision Pro, but about AI and about the camera is about AI. So this is good for the market, and it is a real shitstorm for the bears, because the bears don't see it.
Go ahead, Howard, since you mentioned the Ray-Ban glasses, I'm putting them back on. Meta, they have a conference coming up. That's the reason I'm bringing it up, on Wednesday and Thursday, called Connect. They're going to iterate on the software, the Meta AI software, that will allow you to do more things, presumably with these glasses. And they just extended their partnership with the parent company of Ray-Ban, Luxottica, up to 2030. So it basically pushes away the other big tech companies from taking an interest in because this is another delivery vehicle for AI. And right now, Meta has the pole position on these things. These are $300-$400 things. And the reason I again point them out is that again, for you mentioned camera. These things allow you to do photos and videos just off the camera, and it allows you to do voice-driven AI. And all of this is important because amongst the big seven, only three companies actually, but two through software that they're really iterating hard on. Apple, because we talked about all their devices. Meta, because they reach over 2 billion users across their three services. And of course, the third one is Google, with access to 2, 3, 4 billion people who use search, who use Google Mail, Gmail, Docs, etc. And so AI is going to get delivered through these mechanisms to the consumer at scale in the next 2 years, 3 years. And that's why the ChatGPTs of the world have to make sure they have access to those venues. And right now they have the deal with Apple that gives them a leg up.
Yeah, it's Apple Meta right now. Meta is executing beautifully. Even without China, their Asian numbers are just exploding. And the Ray-Ban thing, that gets them in the fashion business. And this is all about fashion at some. This is all about luxury and fashion. And Facebook has always been about, I hate my neighbor. And this brings them out of the sludge and into the fashology business because they're dead. They have no camera and they have no maps, right? They don't have a mapping product and they never had the interaction. They always were getting fucked. Zuckerberg's been worried about this and with the phone, and at least they now have Ray-Ban, because you're not going to go, Apple's not going to launch their own glasses. They're going to have to, and Ray-Ban is the most recognized brand, going back to Tom Cruise and the Wayfarer model, which is still popular today, 30, 40 years later. So that's just a sneaky Trojan horse. All right, so that's enough about the fangs. Phil, what do we got next? Your mic's off. Of course, on cue.
NVIDIA's gone nowhere for 4 months. Thank you. NVIDIA's gone nowhere for 4 months, and the S&P 500 is making an all-time high, which speaks to the JC's broadening. This idea that you're just getting such a broad. Okay, we're going to China. Okay, so the U.S. has outperformed. Home country bias, whatever. If it's real, it's real. China has been underperforming for a long time, but as we know, that over the really long period, things have a tendency to, regress to the mean and for new leaders to emerge. And so maybe what we're seeing here is what? What do you think, JC?
Yeah, so China's up like 6-7% depending on the index that you're looking at. This is the CSI 300 index, which is basically the S&P 500 of China. Think about it like that. It's better than the Shanghai Composite like that. The Shanghai Composite's a little bit different. So this is the S&P 500 equivalent. Bouncing off this support, there was easing that took place overnight. It sort of catapulted all this, but as usual, the market front ran this, and China was rallying hard into this event, bouncing off key support from the beginning of the year. As somebody who looks at a lot of charts, somebody who's been doing this for a long time, I can tell you with almost certainty that this is not a coincidence of where this took place, right? Stocks move, then the news follows. And that's really what we're seeing here is the market dynamics at play. And what I'd like, so if you go back to the performance chart, I did this on purpose and created a chart of 4-year returns so that we go back to before the market peaked in early 2021 when things really started to roll over. So I wanted to show how the United States has recovered above that, made new all-time highs and continues to do so, and other countries as well. Europe is crushing it. Everything's going right over there, except China didn't get the memo about this recovery. China never recovered. China, in fact, has just continued to just drag on, while the United States and Europe and Japan and other areas have done very, very well. So okay. I think that's it.
Can I chime in? Because this is China we're talking about. And Michael, maybe you have, not to be cynical, but let's be cynical. China did get the message. You know who's been buying the stock all the way down? China. You know who can make the stock go up whenever they want? And Trump would say China with a Y. So someone's been buying the stock as other people have been selling them. and that someone is probably Z, and they're tired of, they don't need to sell anymore. Right? There's no one left to sell. We've been talking about this for months, right? We didn't get it right. I think Phil was getting long China at the beginning of the year. There was a great rally. I think what's confused people about China is their one winner, PDD, Pindua, whatever the hell you call it, the
PDD
TikToker shopping, has imploded. And maybe that's just because the hand of Z stepped in and wants to buy the stock cheaper. But we've been talking about Baba. I'm long. If you follow us on Stock Tips, we've been long. Phil, you've been long, I think, FXI and Baba since the beginning of the year.
FXI only, and since
I think it's getting hurt relatively, Phil, because of PDD, but like it's starting to bounce.
FXI's killing it. We're up like 30%.
Okay.
But up like over 30% for since the Chinese New Year. Year of the Dragon. Longtime watchers of this program will remember around the second week of February, we talked about Year of the Dragon. The stock, FXI had just been killed. So I was just like, you know what? I'm going to buy something. I'm now in the regretting I didn't buy more mode, which you get into whenever you have a winner, and I'll take it. I'll love it. I don't care.
Regrets fine.
Michael.
Yeah. China, I just want to, on a fundamental basis over the last 4 years, JC, I love the 4-year comparison chart. But over the last 3 or 4 years, especially in China on a bottom-up basis, they have fundamentally a lot of things going on. Their consumer is weak. They have huge, extraordinary real estate weakness, which because a lot of the consumers, there's one of the biggest mechanisms of savings, and so that's been a big liquidity thing. And then China's industry, again driven down by Xi, to your point, Howard, they've been over-manufacturing everything under the sun, and they're desperately trying to get this stuff out into the export markets, where they're seeing some headway. We're going to talk about Tesla soon. But Ford CEO Farley was in China just a little while ago, and he comes back and basically tells his board that it's existential what's happening in terms of the quality and pricing of Chinese vehicles that are coming. We've talked about BYD on the show. You're going to talk about Tesla, etc. There's a tsunami of Chinese products coming, not just the EV cars and so on, but China, if their politics didn't trip them up as the way they have, they would be doing a lot better fundamentally. On a bottom-up basis, technology companies in China, my hat's off. AI companies in China, my hat off. These guys are executing even with last year's processors and semi chips from 2-3 years ago. They are neck and neck with our best open AI companies in terms of some of the capabilities on the consumer side of the equation. So I just want to point out that China obviously is a politically driven market. There are a lot of other restrictions in China. Investors can't short things. I'll just point out this week, one of the senior economists of China was disappeared. He was erased from the websites, etc., because he apparently said some negative things about the government and CCP and how they're managing growth and consumer demand and so on. And they just wiped him out. He's in detention somewhere. So China is a very unique animal, and we can't just look at it just in terms of the relative charts, etc. There's huge fundamental differences that we've always got to keep in mind on China relative to the world.
And I will say, listen, this is a trade for me. Like, we've been fucking could care less about China. I'm their enemy. And that's the way I see it. I'm embarrassed by what they're doing to us with vaping and our kids. I'm embarrassed. We suck. We can't get our act together, right? They're just shipping poison to us. This is just a trade. Z is president for life. They're playing a different game than we play, or he is. And he's accumulated all he needed to. And here's the pump. And listen, you don't have to like it. You don't have to agree with it. You don't have to believe in the companies, but the pump is on. And JC has the technicals on it. They make good product around tech. So it's just a question of politics and your stomach for risk. But I don't want to spend too much on China because fuck them. But
here's what I think. I think that it's bigger than that. Right. So I'm not one for conspiracy theories, even though you're probably absolutely right. Not the point, right? Not the point. I agree with you. It's probably a bunch of you're probably spot on. But let's pretend that that's not the case, and let's just look at the data itself. What we've been seeing since that volatility spike on August the 5th is all of those things that peaked early the last cycle in early 2021, before anything else peaked. The IPO stuff, the ARK stuff, everything that has just been getting crushed are the things working. Airlines, crushing it. ARK, killing it. China, the IPO index, all doubling the returns of the major US averages. The leaders over the last 2 months have been the worst places on earth. Now you're starting to see some stuff in solar also, the PayPal, Square, like all the hot garbage is getting bid up. That's what happens in bull markets. The laggards catch up to the leaders. So Lindson's probably right, but I think it's bigger than that. I think it's that flight to garbage, and that's indicative of risk appetite, is it not?
I think risk appetite is there, but the garbage has remained garbage. PayPal's running. Square, run by Jack, is garbage, not running. So maybe people love Square, the product, but the company itself not running. So there is some. What I do like about this, JC, is the opposite. Is like the shit isn't running. Trump stock goes down. Fakes GameStop. They're trying every pump in the world right now, not working. So I do like,
but Howard, but those are two very specific situations.
But they're animal spirits. But they're the animal spirits of the last. They're the animal spirits, and those tricks aren't working. So I like that those old tricks aren't working, and the market's going up. So it's not. It's you're right. It's like you said. It's a fly on a cow's ass. But I do like the behavior because everybody wants to say, "Oh, it's frothy." I'm like, no. If it was frothy, those old tricks would be working.
It's not frothy. We have the data. We have the data. Yeah. It's not frothy.
Anyway, so I again, shitstorm for the bears. They're chasing, if they want to go buy Square and DJT and fucking GameStop, it ain't going to work for them, most likely. Square's going to have to execute this time.
But there are short squeezes working. A lot of these high short interest names, Carvana is absolutely crushing it. That is the blue chip short squeeze name. Of the trash, if Carvana's working, the others are too.
Yeah, and there's some biotech names now starting to work. Listen, we've been covering here. All right, what's up next, Bill?
My view is this is a legitimate bottom in China, and it's going to be a tailwind for U.S. and European markets. One more. This is a JC special. He didn't even know I threw it in here. I got a QFIN that he's been talking about. This QFU technology. I don't even know what it is. But JC, you've been talking this thing up. Look at this chart. What's going on here?
Yeah, so this
basically an all-time high. So all right,
it's making new 3-year highs. This is the Stocktwits of China, right? So this is a Chinese mid-cap.
So you're saying there's a Howard Lindzon in China? Is there a Howard Lindzon in China?
It's a really scary thought.
He may be biking in Italy as
well. I
well.
want a fucking dumpling. Now I feel like having a dumpling. I just said
they
China,
don't have those where you are, Lindzon. You're good. Just eat what they tell you to eat. Just don't worry about it. You're fine.
I had some lasagna today. Oh, dude. Okay, keep going.
So QFIN, making new 3-year highs. Just one example. Remember, these Chinese stocks have gotten slaughtered. So when you see a Chinese stock making new 3-year highs, it's not something you see every day. In fact, today in a meeting, I think it was Straza was like, we were talking about 10-cent music. He's like, this is the best Chinese stock. It's only down 35%. Right? You know what I mean? Like that's like the way he said that so nonchalantly was just so classic of the type of environment that China has been in. And the fact that something like this, which is like this like random fintech company, $4 billion market cap in China, making new 3-year highs, that relative strength stands out to me.
Well, it's not Stocktwits of China. It's a consumer finance club. Yeah.
Lindson's like, just to be clear, that's not true.
Yeah,
Fake news.
Just in case people are clicking buttons and have 10 fat fingers, JC is making just a statement. But it is a fintech company.
Fintech. Yeah.
All right, so you've got to have better ideas than that, but that's an interesting one for sure.
In China, it doesn't get there's not many, Howard.
Let's go to this. I just like FXI. It's making, I think, if it closes here, it's a 52-week high today, I think, but don't look at the charts yourself. Tesla, that's another one you're looking at, JC. Let's just go right to that and then we'll talk a little bit about what's going on there too. But the price behavior here is looking very promising to you.
Yeah, this is the Chinese electric vehicle company for the United States. This is Tesla, and huge base, guys. I mean, people forget that there was more shareholder value created faster in that 3,000% rally where it went from 30 billion to from 30 billion to over $1 trillion in market capitalization. Nothing like that had ever happened before. So clearly, at some point, a lot of that stuff is priced in, and the market needs to just digest those gains. That's just the way it is, particularly from the largest increase in shareholder value in stock market history, which is what that was. So it's been 4 years, probably pretty freaking well-deserved. This doesn't look like a top to me. This looks like a very well-deserved, healthy consolidation that, in my opinion, is going to resolve higher. Consumer discretionary is catching a bid. This is 17% of the consumer discretionary sector after Amazon. So this is the second largest. And I think a new all-time high is coming. And if you get anything resembling what got it here, and the market is historically very symmetrical that way, anything near what got it here, and you're looking at the largest company in the world potentially, that's the upside risk, in my opinion. I don't know how high it goes. I don't know. But the risk is this is the largest company in the world.
Michael, go ahead. I have no comment.
No stock recommendations here, of course. But for a long time, as you all know, JC, I totally see your argument from the performance point of view. But as you know, I've been in the other side of this trade. The more I look at it, on a fundamental basis in Tesla in terms of their auto business, what they're promising the world in terms of robotaxis, taxis, AI, everything. I think Tesla for the last few years, I absolutely agree with you. Hats off on the performance, what Elon has been able to execute. But this is the mother of all meme stocks of the last decade. The others are just little minnows that we're talking about in terms of the way this has this huge following around automobiles, this vision of a climate-free world, this vision of going to Mars. No one can live on Mars. Humans will not go to Mars for 100 years, is my statement. And I can give you a scientific bottom-up thing on that. But because there's so much radiation, there's no way to protect us. And that is never talked about. But let's come back to Earth. In terms of Tesla, the near-term thing is robotaxi. Elon just tweeted that, oh, yeah, we can now summon your car and make it park and come out of a parking lot. The edge cases on AI are going to take at least another 10 years to solve. He's been promising full self-driving for 10 to 12 years. He's extracted over $2 billion from users, promising them better auto driving every year for 8 to 10 years. The people who bought these 2 million cars, of which about 400,000 right now have full self-driving, that they pay $12,000 today if you buy a new one, just for the full self-driving. It's almost no better than the auto assist you can get with everything from a Kia to a Mercedes, level 2 on a level 5 scale. And the world basically thinks if you buy or own Tesla stock or car, you're living 3 years in the future. In reality, you have been living 3 to 5 years in the past. And at some point, this catches up. When the market cap of this company is 2 to 3x that of the largest auto company in the world, which is Toyota. You can look it up. And you've got the Chinese that we were talking about coming full force at the world. Yes, they won't come to the US this year and next year because we've put 100% tariffs on Chinese cars. But guess what? Look at the EV sales in Mexico. 40% of the cars sold in Mexico are Chinese cars, EVs. They're around us. The water is lapping at our shores. That is why the CEO of Ford, Farley, is saying, holy moly, guys, we need to pay attention. That's why all the auto companies in Europe and the US are going to their governments and saying, hey, protect us if you want to keep our manufacturing jobs. And Tesla is right now riding above that because of this thing that, this aura that this meme stock has. So that's my fundamental bottom-up view on this.
Time with some wealthy people. If you get in the Mercedes new e-car, fucking blow your mind. It'll blow your mind. Like, you think a Tesla iPad is something. Get in the new Mercedes e-car if you're rich. and you're not going to buy a Tesla. You're going to fucking go for because the experience of driving a Mercedes plus the mapping and the screen is really a next level experience.
There's a famous story. One of Elon's daughters about 3-4 years ago said, "Dad, I'm sitting in the back seat. There are no lights there were no lights in the car." Elon, for years, he's figured out, for 5-6 years, he basically reprogrammed 100 years of car buying experience that you get a new car model every year. We've not had an upgrade on a major Tesla for 3, 4, 5, 6 years. He doesn't put any accoutrements in the car. There's no handle sometimes. They had to force him. The daughter had to force him to put a light in the back seat so she could read her book. Relative to a Mercedes, it's no contest, and yet the prices are $80,000-$100,000. You look on social media, the Cybertrucks, they're rusting in the rain for a whole bunch of reasons. The wheels the covers are basically tearing the tires up. There's all kinds of production issues. He is the Tom Sawyer of our time, meaning he's convinced the world. No, he's convinced the world that, pay him to paint the fence and while he eats the apples on the side. It is that is the world we're in with Tesla, and yes, that is totally disconnected with how the stock behaves, etc. But on a fundamental basis, as an analyst, when I look at the underlying pieces, I can't add it up, and that's why I just pointed out relative to the chart. To me, it's a master meme stock.
I just look at the money flow. I see consumer discretionary as a massive underperformer.
We got your point. We got Michael's point. We can move on.
So it's not just Tesla. It's Amazon too that's been a massive underperformer. Home Depot to a certain extent also. So the 3 largest consumer discretionary stocks, massive underperformers. So this is a bull market. I want to reverse engineer what consumer discretionary is doing if this is still a bull market, and money's going to be flowing into those stocks regardless.
And
of
it's flowing into Tesla right now, so we'll see. Okay,
you know what I think about? I think about multi-time frame analysis that Brian Shannon does, and one thing that he does is he looks for charts that line up on the short, intermediate, and long term. And when all 3 of those charts look bullish, it's a screaming trade. And so when I think about Michael and JC both doing analysis here on the same stock, I'm looking for them to line up. I'm looking for the deep fundamental case and the technical case. And so here, what we're seeing is a difference of opinion. So for me, it would just be a pass. I hope it does well because I hold, index stocks, and when the big 7 are doing great, the mega 7.
We all own a bunch of it, whether we like it or not.
We own a bunch of. I own it whether I like it, whether I like Elon or not. It's exactly true. Okay, let's move on. We're going to go back to talking about AI for a minute because there was an important thing that we kind of skipped over, and I wanted to come back to it, and then we'll go back again to some of the sectors, and I think we got Riley jumping on in a little while. I just wanted to go back. So Michael wrote a post. I think it was just this morning about Sam Altman's recent essay. And if you haven't seen that, it's on Sam's blog. Like he has a blog, like old school. Correct. You could just Google Sam Altman blog, and you're going to find this article. And I just want to read this. I just want to quote from it. And this is from Michael quoting from the post. First off, Steve Jobs, just to set the context. And then, Michael, I'd like you to comment on this. I mean, this is great. First, Steve Jobs with the setup context quote. That's nothing compared with what's coming in the next 100 years. So, this was back when Steve's alive. He's talking about the phone or whatever and computing. And he's like, people are like amazed with what he's doing. And he's like, listen, this is child's play compared to what's coming. And then Michael goes on to quote Altman from his recent article just published yesterday or the day before. This may turn out to be the most consequential fact about all of history so far. It is possible that we will have superintelligence in a few thousand days. It may take a little longer, but I'm confident we will get there. How did we get to the doorstep of the next leap in prosperity? in 3 words, deep learning worked. Michael, your comments on that.
Thank you. No, I thought Sam did a wonderful job with this essay. I would recommend everyone read it. It's on the web. It's also linked in my post, et cetera, as Phil pointed out. And there's a tactical element and there's a strategic element going on here. Sam is one of the best marketers of AI, both in terms of the upside and covering the industry in terms of the potential downside of AI. And he's been talking for a long time about this road to AGI, artificial general intelligence, which is supposed to happen over the next 5-10 years, depending on who you listen to. And it's a function of the models getting better by a factor of 10, 20, 30, 40 times every 2 or 3 years, and the underlying compute, the hardware, getting better at the same kind of rate. And mostly that means NVIDIA, which provides 80, 90% of the chips. And Sam, just 2 weeks ago, announced a product that they've been working on for a very long time called 01, which is AI reasoning, which is the second of the 5 steps toward AGI. So it's chatbots that we've had for the last 2 years with ChatGPT. Reasoning is the current thing that the systems can figure out, think longer, process longer, and come up with better answers by reasoning. Then the third level is agents, and then finally doing all these AGI superintelligence kind of things that help us, the companies innovate and the AI innovates and the AI runs organizations and so on. What Sam did with this essay is he's about a week before this essay, actually, I should point out, he hinted at GPT-5 coming out. It's codenamed Orion. And I had another separate post on this, which if you're interested, you can look at. But basically, he hinted that Orion is on track by the winter of this year. That was a week ago. And then yesterday, he put out this post where he said with far greater confidence than he has in a couple of years, that in the next 5 to 8 years, if you take his 1,000 days number, that you can basically extrapolate that to 5 to 8 years is when AGI happens. If you talk to the head of Google's Gemini, Demis, if you talk to Zuckerberg at Meta, the bid-ask spread is anywhere from 3-4 years to 10-12 years. I happen to be on the longer side of that curve, maybe even longer, but that's not material. But what Sam said yesterday, condensing it to 3 words, was this that deep learning worked. And what he's talking about is not just the generative language AI model revolution we've had since Google's attention paper in 2017, that basically is the current version of this AI wave. It's deep learning and machine learning that we've been working on. The industry's been working for over 25 years. I've been kind of tracking this for that long. And so that is what he's referring to there. And then I took that word, and then he has a longer version of it, 15 words. He says, deep learning worked. It got predictably better with scale. And then we dedicated increasing resources to it. So every one of those pieces is very important. Deep learning is working, meaning the predictive nature of AI is really revolutionary for all sorts of reasons because of the way the hardware and the software works. It gets better with scale, meaning you put in much more data, you make the models much bigger. It will literally go up in performance maybe anywhere from 10 to 100 times in 2 years. That's several times better than Moore's Law. And then the third piece, we dedicated increasing resources to it. And this speaks to the humongous amount of AI capex that's going on, the tens of billions of dollars, $100, $200 billion that are going to be invested by Microsoft. But you just saw Microsoft just spend $2 billion to reopen 3 Mile Island nuclear plant. Amazon just signed a 5-year plus agreement on another nuclear plant in Pennsylvania for several $billion. We're talking nuclear plants that are being redone in the U.S. To basically fuel data centers, and that's basically leading to these 15 words that Sam is talking about. And so that is he's basically saying, look, that the models that they have are working, and get ready for them. And so it's a long-term, Babe Ruth type of pointing the direction of the hit, but it's coming.
Howie.
Yeah, and here's the thing. Let's sum it up, and then we'll go to some more ideas because Mike's brain is we could go on here forever, and it's great. Here's what I surmise. The technicals look good. JC continues to confirm that. The sentiment continues to be in favor of the bears. People aren't talking about Apple. We're making fun of AI, as we should, because there is a bubble in venture capital. We should be appreciative of the bubble in venture capital. Guess what? You don't have to play in it. Let Andreessen and SoftBank and all these, I'll call them lunatics right now because that's what they're doing for us. They're pushing the ball forward, and it's costing sovereign a lot of money.
To your point,
they are burning sovereign money, which is kind of a form of deflation, right?
Correct.
They're killing inflation. If that money was in our hand, we'd be buying Porsches and Teslas and jewelry.
Wine in Italy.
Sure. They're doing the world a favor in many ways because let's just be honest. If we travel, and I travel a lot to see the world, there is so much cash out there. The macro is, there's all these experts that talk about macro all day. It has never been a harder time to do macro because the world is awash in cash. It used to be ugly Americans, and now we got ugly Russians. We've got ugly Asians. We've got ugly. We're not even ugly Americans anymore compared to the Asians and the Russians. So the world is awash in cash. Okay, so the macro has never been harder. Whereas the way JC's summing up the world, we can see what's happening. The money flows are good. Behind the scenes, the VC bubble continues to be good for the end user because they're not paying for it. It's sovereign money that's paying for it. And there will be AI winners. But you picking them from home like you did with Uber in the App Store era is over.
I'll tell you what, I ran into Dan Ives last week, and we were just, shooting the shit. And, of course, talking to him, we started talking about AI. And he made a point that the United States is completely dominating the field in AI. The United States owns literally all of it. China has zero, Israel zero. It's all American. And I hadn't quite
I don't know if I believe that, but America, at least, unlike crypto.
Michael, would you agree? Dan Ives said it's 100% American. Would you not agree with that?
Yeah, from a fundamental, in terms of the large models, the U.S. has 89% of the share.
So TikTok has AI, but go ahead, Mike.
Yes, you're totally right, Howard. TikTok is the biggest killer app ever, but you're not using the generative AI stuff. They're using the deep learning from the previous generation, and yet they're so good. They've hooked 2 billion people like me and you to basically doom scroll on TikTok with AI that is 3, 4, 5, 6 years old is what I'm trying to say. And since we talked about OpenAI and markets, recognize that between now and the end of next week, OpenAI is supposed to close one of the biggest private company rounds ever, $6.5 billion at $150 billion valuation, including companies like NVIDIA, Apple potentially investing, potentially sovereigns. So this is a hectacorn. Right? We're going from unicorns to decacorns to hectacorns. I mean, this is, and I just want to make sure, that registers because that is going to be the Wall Street headline in about a week that OpenAI just completed X billion dollars at $100+ billion market cap.
The only two bigger private companies are ByteDance, which is TikTok, and SpaceX.
Yeah, SpaceX. Okay,
and right after that is Stripe.
Just because I want to go drink some Prosecco out of the
Shane. What's up? There's a company in Singapore, Shine,
yeah.
Shein and Temu are the e-commerce versions of TikTok from China. They are cleaning Amazon's clock, they're cleaning Target's clock and Walmart's clock in the US, to the point where the US government is closing the legal loophole that allowed them to export stuff here.
I don't know if we can. It's scary to me. It's the outlier. I think the outlier in the Middle East and Ukraine is still peace, even though it's a nightmare. That's my hope. But the outlier that America is still, the way we treat China with kids' gloves is pathetic. I'm pissed. I have no idea what I could do about it other than just keep saying that. And we got to vote with our wallets, which we've been doing well with not owning Chinese
stocks.
Lay
off the Chinese food, pal.
But Howard, the answer is not concentration.
There's
is
Chinese
a problem.
food on the Perlman program. Perlman, don't be hating.
Perlman's hating.
You can do it.
Can't afford.
He's like Elon Musk of this podcast. He's
shrimp and steamed mixed vegetables. That's my go-to. And a little egg drop soup.
Wait a minute. If you go after ducks, they're going to call you a Haitian in Springfield.
Yeah, they're
don't
eating
go after ducks.
Okay,
I get called worse
okay.
things.
Let's
I
do
get called
trends with no
worse things all the
friends.
time.
JC, if you can hang around, we may come back to a couple of your sectors. But if you can, it's okay too, because we're running
No,
out
I
of
love
time.
you guys.
But let's
I'm
get
out.
in trends with
Later,
no
Riley.
friends.
Good seeing
you're
you in
rolling.
Chicago.
Good seeing
Later,
you.
buddy. Trends
Those
with no
brats are
friends.
so good.
Riley Roseby, we love you. I love this play today because this is a company everybody knows. Go ahead.
You know, I actually wish JC stuck around for a little bit because he had a brilliant chart of basic
We'll pull it up.
materials. Yeah, can we pull up the
Yes.
XLK chart? Or XLB?
XLB and XLB.
Yeah. XLB is making a new all-time high. It's gapping up and going today. And then the name we're going to be looking at for the trends with no friends trade idea is DuPont, which you can see is the 10th largest weighting in the XLB. Doesn't really come close to the Lindy or the largest components there, but it's still pretty significant. So let's go to DuPont. And DuPont is a $35 billion market cap with about 3,600 followers on StockTwits. So the absolute number is relatively high. But for the size of the company and just its prominence, it seems like a relatively low follower count. So the strength is evident here in the daily chart. Stock's up roughly 3% up and to the right. But let's go ahead and zoom out to that next chart, which is the monthly chart, and we can kind of see how significant this base really is. So over on the left side, those are the highs from 2005. The stock peaked around $80. And then really this 85 to 80 range has acted as resistance ever since then. We briefly got above it in 2017, but now we're really starting to kind of come out of that base.
I guess the key here is, Riley, we got to look up, see if there's a product catalyst here, right? Like it could be weak dollar helping, it just could be general money flows, but that is a nice base. And again, it's just one of those, no one cares. It's like, it's a good sign that you have stocks that are going up with very few followers. This list has been producing winners for the last 6-7 months, obviously straight. All right, so good eye there. Phil, do we have one more idea before I leave? AVAP. Everybody's dropping just a drone idea. I've owned it a little bit. I'm starting to do more work on it. AV, Israeli company. In this new world of war. Don't worry, we can bring it up next week. But a really fascinating company. Probably not a lot of followers. I'm looking up the market cap right now. I'm just doing this because JC had one with QFIN. But AV, just a $6 billion-ish company, and really volatile here, which is I like because that there's a move coming, and it feels like the move's going to come in the direction of the trend. And with two wars going on, this technology is getting pushed very hard, and still a tiny company. So
And
I don't know if it gets bought out.
A defense company.
I don't know if it gets
right?
bought out by somebody, but like this has been the leading drone company, and very few people follow it. All right, so that was my big idea.
I had one.
Go ahead,
I had
Phil.
one comment I wanted to make, and I just wanted to give you kudos, Howie, because I call this segment "Old Men Moving Their Bodies," and this is slide 20 here. And so Howie goes biking. You don't have to go to Italy and go biking, right?
No.
I mean, this is a great picture too because you look healthy and old there, and it's perfect. But you're going out there and you're going out to Italy and you're biking these mountains. And I know you hit that Peloton when you're home, and I know you get out there and move your body. I've gone running with you in Coronado on the beach before, years ago and forever. And this is the thing, right? You get up there, people watching this program, any age actually, younger people, older people. I talk to a lot of people and they stop moving, right? They were athletes in high school. They stop, they have to work. They have to do this. They have families. They get so busy. They stop moving their bodies. Michael is shaking his head. Yes. The beautiful thing that you're doing, Howie, and the fact that you're role modeling this behavior for other people who read your blog, read your newsletter, who see you on social, and who now are watching this podcast. This is just a beautiful thing that you're doing and that you're sharing it, because you just and you don't have to ride a bike. You don't have to get out there and ride the bike. You can run, you can walk, You could play tennis, you play pickleball, it doesn't matter. But just, being in your 50s, being in your early 60s, getting out there, moving your body will prevent you from aging drastically. It will slow down your aging process drastically.
Yeah, I will. Thank you. I will say, Phil, that like the point for me is for the kids like to see it, and I've watched my mom, and we've all watched certain parents. We all have it right now. So we used to die in our 50s in the dental chair 50, 60 years. If I could go in for a toothache 6 years ago, you were a goner. So it's as you get older, you're living on borrowed time. So just kind of my attitude. But I think I have to say that I'm pulling back on the cycling, Phil. Weightlifting, I think, is just as important, and protein. This is shit we didn't know 10 years ago, or if it was crowded out with other news and noise, and I didn't care about it. But the amount of information and how simple you can do it. You and I have both done it. A couple people in the photos, they started this trip together 7 years ago, Mike Dean and Allie. They were so fat and out of shape. And they were doing they started their first trip now we've done 10 of these. It was a downhill trip, right? They were like on like pink bikes. It was Transalp. Basically, it was like point the bike down and now it's just how high can we go? So I think you have to just start, right? There's so many bad habits in this degenerate economy, and I kind of joke on that, and that's my whole index. But the opposite of the degenerate economy is there for everybody as well, and that's fitness and lifestyle. So it's good. They're very connected. The degeneracy and the other side of it are very much attached. So you can kind of do both. So those are just choices. But anyways, I appreciate it.
I know,
gentlemen.
Go ahead, Michael. Last word.
Go ahead,
I just
Mike.
wanted to applaud. I feel your point on Howard, and I agree. Both you, Howard, and Phil, very strong near-term lessons on just moving to feel better. My other long-term hero here is Jeff Bezos. Every time I look at a picture of him, the guy is like so mega ripped, etc. I remember meeting him in the '90s. He was one of the scrawniest kind of people ever, and he's just transformed, not just on his accomplishment with Amazon and wealth and so on, but just the way he's living an extraordinary, ahead of his time physical life.
It's open there for all of us. All right, John, Trends with Friends. Riley, good to see you. I'll be back at home next week. Thanks, everybody.
See you guys
Later.